Hey guys, over here for the Financial Couple. On today's video, we're going to be talking about ways to prepare and make money in the next market crash. If you guys like what you see, please help me by hitting the like button and subscribe to the channel. So without any further ado, let's get started. Given by the National Bureau of Economic Research, the definition of a recession is a period of a falling economic activity spread across the economy, lasting more than a few months. Between 1785 and 2019, the United States has had around 47 recessions. The reason why I bring this up is because a recession is just the end of a recurring business cycle. Just to name a few recessions, we have the oil crisis between 1973 and 1974, the early 1980s recession between 1980 and 1982. We also have the Black Monday on 1987, the famous dot-com bubble between 2000 and 2002, the more famous Great Recession due to the housing market between 2007 and 2009, and finally the 2015 market sell-off. Now that I have defined what a recession is and given you guys some examples, let's go over some steps to prepare for them. The first step would be to have an emergency fund, and by these I mean to have anywhere between 6 to 12 months of monthly expenses in the event that things don't go as planned at work, or if we see a certain increment on daily items such as food or other services. The second step would be to pay off any debts, such as electronics, appliances, or even cars that tend to take away anywhere between $100 to $500 per month. By doing this, we can use that additional income for any emergencies or even to invest it and acquire more assets. The third way would be to identify ways to cut back on your monthly expenses. Some examples will be to decrease your phone plan, maybe cancel your cable subscription, find a better insurance quote, or even look for deals when it comes to groceries. The fourth step is to live below your means and adopt a minimalistic mind. Really ask yourself if you need that extra shirt or shoe, or even to go out every weekend. Learn to create a balance between needs and wants, but also enjoy your free time and make the best of it. Finally, for step 5, we have to start a side hustle. Whether you start your own YouTube channel or to sell stuff on eBay, by generating an extra $100 per month, you will increase your income to have a little more room to invest or spend each month. Before we talk about how to profit from a market crash, I do want to emphasize that you should always focus on the long term. The reason why I say this is because regardless of all the information available to us, you cannot, and I'll say it again, you cannot time the market. No one really knows when the exact day of the next crash will be, so just keep that in mind. The first step in order to make money during a crash is to know your risk tolerance. How much are you willing to lose? Have a plan in mind on when to get in, when to get out, and for how long you plan to hold your position. The first strategy that a lot of people have is to average down. Multiple investors might have several positions where they just keep adding more and more on a monthly or quarterly basis. By doing this, you increase your chances to protect yourself from a market crash, as you will be paying a little extra for some stocks, but at the same time, you will get to buy multiple stocks when they are marked up with a 20 or even a 50% off. The second strategy is to have a 50-50 mind game. And by this, I mean that there are several investors that have a 50% of their investment in the market, and then the other 50 will be on the sideline waiting for a drop or any opportunity to get a good deal. The second step will be to learn to deal with pessimism, since everyone will have a sell mentality. Learn how to control your emotions and stick to your plan. Remember that recessions are where all stocks go on sale that may only happen every 5 to 8 years, so don't invest based on others' opinions. Finally, the third step is to write the market. Be patient and keep educating yourself. Learn about financial analysis or how to read the quarterly reports. Find other stocks that might be interesting to you, but just continue to build your skills and learn from your previous mistakes. Just to show you guys how important it is to have a long-term vision, we're going to be going over this stock market crash calculator. This will estimate how a portfolio tracking the S&P 500 would have fared and how quickly it would have recovered after some of the biggest stock market crashes and bear markets since the founding of the S&P 500 in 1957. As an example, we're going to be taking a stock portfolio balance before the market drop of $10,000. So if we look at the oil crisis between 1973 and 1974, the portfolio value at the bottom of the oil crisis would have been of $5,180. However, the portfolio value as of December 31st of 2018 would have been of $208,490. So in this case, the S&P would have recovered from the oil crisis in 7 years and 5 months. If we do the same thing during the early 1980s recession between 1980 and 1982, our $10,000 investment, the value at the bottom of the early 1980s recession would have been of $7,170. However, the value of the portfolio by December 31st of 2018 would have been of $178,400. Now, in this case, the S&P would have recovered from the early 1980s recession in a year and 11 months. If we do the same thing during the Black Monday of 1987, our $10,000 investment would have had a value of $7,920, and the portfolio as of December 31st of 2018 would have been of $88,680. In this case, the market recovered in exactly a year. If we also do this for the dot-com bubble between 2000 and 2002, our $10,000 portfolio at the bottom of the dot-com bubble would have had a value of $5,080, which in this case, yes, it was like 50%. However, the portfolio value of December 31st of 2018 would have had a value of $16,410. In this case, the S&P 500 recovered in 7 years and 2 months. Followed by the Great Recession between 2007 and 2009, the value of the $10,000 portfolio at the bottom of the Great Recession would have been of $4,320. However, the portfolio value as of December 31st of 2018 would have been of $16,020. In this case, the S&P took 5 years and 5 months to recover. Finally, if we do the same thing with the 2015 market sell-off, we see that our $10,000 market portfolio would have had a value of $8,580 during the market sell-off. However, as of December 31st of 2018, that same portfolio would have had the value of $11,770. In this case, the market took 13 months to fully recover. So this is the main reason why you guys should always look for the long term, because regardless of bear markets, you can just keep buying and sooner or later the market will just go back up. Guys, if you found this video helpful, please don't forget to hit the like button, subscribe to the channel, and hit the notification bell so you know when the next video is up. Follow us on Instagram at The Financial Couple. If you guys have any additional questions, please leave them down below and I'll get back to you as soon as possible. And besides that, I will see you guys in the next video.